Here we are with Federico Sandler, who's
Hello.
hello, welcome here. I'm so glad that you want to be here, and you want to talk. You are in a unique position to talk about both Mercado Libre and Nubank. Currently, you are the IRO, or for those who don't know, the Investor Relations Officer at Spider Investments. We're coming back to that. It's an investment firm based in Miami, Florida, if I'm correct.
Correct.
And globally, I think, or
Yes.
at
We have
least
offices
in Argentina.
beyond Miami. Yes.
I have seen that one. But previously you were at Mercado Libre for the IRO for 6 years, and then 2 years, if that is correct, at Nubank. 1 year.
One.
1 year.
Yeah.
All right.
But it was quite a year because it was the year that the company went public. So
yes,
it felt more like 5 years in 1 year.
Probably. So, let's do this chronologically, and
Yep.
starting with Mercado Libre and ending with your current job, right? Nice t-shirt, by the way. I love
So
Foo
yeah,
Fighters.
we can start there. It's actually an interesting story. I was actually not looking for a career move at the time. I was working at a local private equity boutique firm that actually focused in very traditional industries like utilities and oil and gas. And I was approached by a recruiting firm at the time. Interestingly enough, she told me she was looking to fill an IR role for a publicly listed company out of Argentina. So I responded, well, that's either Globant or Mercado Libre. And obviously it was Mercado Libre. And I think it was at the time, I was always told by my leaders before Meli that I would be a very good fit in investor relations because I had sort of the emotional intelligence and the communication skills to transmit complex subjects, but at the same time I had sort of the financial knowledge to be able to lead an IR function. So I decided to give it a shot. I went through a very long interview process. The last interview with Marcos Galperin, which is the CEO.
Mm-hmm.
At the time, he lived in Uruguay. But I mean, it was really, Mercado Libre really changed my life, not only on a professional level, but also on a personal level. It gave a lot more purpose to my career. So I'm incredibly grateful to what happened to me at Meli. And we'll go over a whole bunch of things, but I learned from really the best, and I got deeper into a business that it really exploded at the same time that I came into the company. So basically in 2015, when I started at Meli, it was really more of a 3P third-party marketplace where Meli was really an intermediary. They didn't touch packages. They didn't really have a fintech business. They just processed payments online. And when I left in early 2021, the company had grown, like $60 billion in market cap. It had built a logistics network. It became one of the largest digital financial services provider in Latin America. It went from 5,000 employees to, at the time it was like 12,000. So a lot of things happened in the middle, but I'm very grateful that I was able to command IR through that time because it gave me a lot of teachings and lessons and management skills that probably I would not gain if I would have kept my private equity job.
And can you give some examples, or was it mindset, or was it practical, or both?
It was more than mindset. It was about how do you communicate with investors difficult decisions that are geared towards the long term, but how do you pitch it? So for example, when I started at Meli in 2015, gross profit margins at Mercado Libre were in the mid to low 60s, and EBIT margins were around the 30s. It even paid dividends at the time. Mm-hmm. And as a consequence of management realizing that price and selection was not going to be enough, and that convenience was the third leg that Bezos had sold really well in the US, the company decided to pulverize margins to invest behind the logistics network. So
yeah, and that's something investors never like to hear, right?
Exactly. The communication around we're going to destroy, I'm going to tell you an interesting story. The communication around we're going to destroy margins in the pursuit of the long-term benefits. It sounds very nice on paper, but as you said, when you remove profits out of the equation, you could see some pushback. So the way that even Marcos at the time pitched it is, he said, look, we had eBay, right, as a shareholder for 15 years roughly, and we saw what happened in the US. And in his view, and most of the management's view at Meli, it's not that eBay lost. Sorry, it's not that eBay
did something wrong.
eBay lost. No, eBay lost. It's not that Amazon won. It's that eBay dropped the ball because they decided to continue to have fat margins while their neighbor in Seattle was investing on distribution centers, on delivery times, on owning more of their destiny. And we can see the market cap dispersion between Amazon and eBay, right? So it was sort of a way of saying, look, if we don't invest behind the logistics network now, someone else will, and we risk missing our leadership position. So the communication of all that multi-year investment that came with margin compression, it was actually very successful, because if you look at what happened to the Meli stock price between 2015 and 2020, it more than tripled, but the profitability went to zero. Yep. So I learned a lot around how to communicate, in the way to communicate, what angle to take, more of an investment rather than an expense kind of thing. So managing, the investors around that investment process was challenging, but it brought me a lot of learnings around communication, expectations, and all that stuff that is really important for investors.
I can imagine. I mean, the first time was probably the hardest time, and probably once you open that door, you see a new reality there probably.
Yeah. Also, I think the way it was planned is, look, we will show them that the profitability obviously is going to get eroded, but we will show them very tangible metrics so that they gain comfort and explain them what we want to do so that they can get comfort with the investment story. So for example, we would give them out, percentage of items delivered in 48 hours or less, and net promoter scores, penetration of the logistics network, how much of the volume was being taken away from the national carrier in Brazil, which was cheap, but was a very poor user experience. There was a lot of hand holding in the sense of, making you understand, look, if we don't invest behind logistics, we risk not having the largest revenue base in the region. If we don't have one of the largest revenue bases in the region, someone else could outspend us. So as a consequence of accelerating the investment behind the logistics network, reducing delivery times, what happens is your sales increase, your gross merchandise volume increases, and you actually get to a point in time where you begin to deliver operating leverage, because you're not going to open distribution centers forever. Because once you have that logistics network completely set up, your revenues will continue to grow very fast because people gain recurrency, right? Because everybody's getting stuff fast, but you're not spending at the same level, or the expenditure in the expenditure in logistics, the growth in that expenditure is lower than the revenue growth. Yep. And then you begin to have that operating leverage, which we're seeing today in Meli. So absolutely, what's interesting to me is everything that I said that would happen, it's actually happening, right? So it's really interesting for me in that sense.
Yeah. Sure. And I think, maybe the lesson there is that openness is or truthfulness and sharing as much as possible is probably a very powerful weapon weapon is maybe too negative, a tool, a very powerful tool in getting investors along for the journey, right?
Yeah, exactly. And I think that segues good to one of your questions where you asked me, did I work with Marcos and Stelio, and we can get into that. But one of the I would say, you asked me about the direct things that I learned and the indirect things that I learned. I think from the direct things that I learned is, number one is the candor, and candor is one of the biggest drivers of long-term relationships and trust, right? So I really saw firsthand how saying, the truth, which sounds like you should do it all the time, but being very candid about it. We're really good here we need some work. This is not going very well, but this is what we're going to do. That for an investor is a lot more valuable than, painting everything that is going great, and then they have to know through a press release that everything that you told them wasn't really that way. So as you begin to be a lot more candid with your investor base, you build trust that then it will serve you very well in the difficult times, because they're not going to just sell your shares, because they know that you're executing on a plan, and that some things can go well, some things may not, but they will always have the truth. So candor is number one. The second that I also learned directly from them is to be gracious with the competition, right? So be wary of those companies that trash talk the competition, especially if they are doing well and they're spending time, talking about another player or speaking bad about them. So those two things, I think they're very important from an investor relations standpoint to generate long-term relationships with the high quality investors, right? With the T-Rows of the world, with the Bailey Giffords of the world, with the Invescos of the world, which are the types of investors that you want to have in your cap table, and that they have the capital and also the long-term vision if you narrate it correctly, right? Which is, a challenge. That's why they brought me.
I think you're in a great position to answer this question. Not so many people are in that position. Does it, isn't it just like human relations that you have to be honest, you have to be open, you have to share, you have to also share your problems, and then people like you more?
Yes, not only that, I think that's why I think investor relations is it's like an alchemy of different skills, because even within the investors, there are investors who are more data driven and they want to go, straight to the point. There's others that they rather, have more of a narration. So you also need to understand what they're looking for and give it to them in a way that it's easier for them to understand. So the more you engage with investors, you sort of profile them in ways that better how to communicate with them in a way that it's easier for them. I don't know if that was clear, but it gives you a lot of gymnastics into how you engage, because not all investors have the same needs or the same optics, right? So you need to understand how to deal with different types of personalities and so on, nationalities, culture, everything. So it goes into the investor relation function, but at the end of the day, although it's human, you need to know what you're talking about, right? So who are your competition? What's your market share? What's your take rate? You can't invent those things. So there is a technical component to the job as well.
Of course. How would you describe the company culture at Mercado Libre?
Yeah. So look, I think when you look at culture, I'll speak about both companies, because I think they have very similar things in terms of culture. I think when you look at what they do, so one of the reasons why I decided to work both for Nubank and Meli was because of the culture. So they have cultural principles that they used to hire and they used to fire, which is very important. Both companies have a customer centricity. They're challenging traditional industries like banking and retail. Both companies have sort of a startup-like way of operation with a focus on agility, on experimentation, on innovation. And I think those are components that enable you, differently to some of the traditional players, to have an edge, but it's something that you can't pay for. So when you ask me, why do I believe Nubank or Meli can win versus the incumbents? It's obviously because of the tech, but it's also obviously because of the culture. So to just give you an example, Meli and Nubank have cultures where testing and learning and losing money is not something that is prohibited or frowned upon, but it's actually a way to test, learn, pivot, and execute. And, when you look at a bank, for example, sometimes A, they can't lose money, so that limits their ability to test, or B, they have so much bureaucracy that in order for them to change, a input to a credit algorithm, it may take them, 12, 18 months, and the predictability of those models sort of dilute. So a culture that is nimble, that is meritocratic, that has cultural principles, and that they actually fire for cultural reasons, I think it's very compelling, because what you don't want to have is an organization full of brilliant jerks that execute well in the short term, but break things in the long term. And that's something that I really saw, like, very similar both to Nubank and Meli, founder-led, very involved founders.
So if I summarize, I think it's interesting that you talk about the firing part, because usually there's a lot of emphasis on the hiring, but not enough on the firing, I think, and that's why I want to talk about it a little bit. So if I understand you correctly, you're saying people can mess up as long as they are open, but they cannot mess up on company culture part, or the how they behave with coworkers, etc. Is that correct, or is that too simplistic?
Exactly. No, exactly. I mean, culture at the end of the day is how the company takes decisions, whether it is internally or externally. No, so the culture at Meli is, it's fine. You can go out and test and pivot and learn from your mistakes. That's how Meli was built. So making mistakes is not frowned upon, but there are approaches to doing things, right? So, for example, one of the cultural principles at Meli is we have fun. Well, we nos divertimos. I blank, but it's a cultural principle where you have fun, but that doesn't mean that you should not be executing. But always being mindful, of the way of doing things. But there's also some aspects that are very similar around customer obsession, right? Not only the customer service, but the mindset of the company, even from an IR standpoint. So who are my customers? Well, the investors, right? They are my customers. So, there is a component around customer obsession. There's also a component around diversity and inclusion. So that's also ingrained in the culture. Usually companies that have a diverse, workforce tend to perform better. So both companies try to create an environment where everyone feels, valued, respected, regardless of their background. So if someone is disrespected, if someone is treated not accordingly to the cultural principles, even though you're a rock star, you could get fired, right? And then the other one is that I really liked, and that it mitigates a little bit the question around, doing things the wrong way or not following company procedures, is the ownership and accountability, right? So both companies give you a high degree of autonomy, a high degree of responsibility, but that comes obviously with results, right? So I thought that was very interesting, and also the fact that both of the companies have a culture that's focused, innovation, and really creating a supportive and an inclusive work environment. I'm not saying it's not stressful, but I think there is a lot of a focus on, employee well-being and doing things the way that the company does it. And that's why you have those cultural principles that you follow.
I heard you talk about the inclusive part. One of the things that really stood out for me when I researched Nubank was exactly that. 43% of their developers are female, which is, such a huge talent pool, which is, for a big part unused or not used enough. So how do they do that? How do they focus on that? Or was it? Well, my first question maybe, was it the same at Meli, or?
Yeah, but both companies have a focus on diversity. I would say Meli was more of the pioneer, but Meli was also founded earlier. But I think Nubank has really stepped up the gas as a priority. So they have a whole, D&I department that has, that they focus on opening positions for minority groups, that are opening positions for, engineering roles, specifically for women. There's a whole initiative of both Meli and Nubank where they are working with national universities or with even software development houses, which they have invested some, there's a place called Digital House in Argentina that Meli is an investor, where they help to increase the engineering talent pool from minority groups and non-minority groups, and many of this talent eventually end up working for Nubank or Meli. So there is both companies understand that engineering talent pool is limited, and they're finding ways to stretch that, not only with the traditional, male, white, educated person, but trying to increase that, the potential for people to code and be engineers by also working with universities and software development houses, basically.
Yeah. I think maybe this is underestimated a lot, because it's easy. There's some sort of anti-woke movement right now, and this is put in the woke, but it just makes sense from a business point of view, right?
Totally. It makes sense from a business point of view, but also from a societal point of view. And that's also something that Meli and Nubank are very much focused. So when I left Meli, roughly, I think it was like 600,000 families were living off of Mercado Libre, selling on the marketplace. So that's pretty impactful. And when you look at the quality of life of people for example, the unbanked or the underbanked people in Latin America who begin to adopt financial services like a bank account or a loan or an insurance product, their quality of life improves significantly. They're able to save. They can, make their house better. They can take an engineering course. So there's a whole, point around not only building a sizable business, but being a contributor to society overall, no? And I think both Nubank and Meli do a really, really good job at that.
And again, from
around five.
Yeah, go ahead. Sorry.
No, I was saying not only from a financial inclusion standpoint, where both companies are very similar. So I would say Pago and Nubank look very similar, but also around the commerce piece. Another example is, for example, Mercado Libre has a sustainable vertical where they only sell sustainable products, and that's been quite a big success. And they also have a category for, people who do like artisanal things and more of a local thing for merchants that are, more in the fringes, right? And the commission that they charge is zero. They enable them to sell on the platform at little to no cost. Processing payments is free. So there's a whole point around, improving the lives of people through technology, which I found really noble and inspiring in both companies.
And it's a win-win-win, right? It's a win for society. It's a win for the merchant. It's a win for the company. And I read Factfulness. I don't know if you have read it. It's from a Swiss professor, Fede or so. I don't remember his name. And one of the things that stood out for me was the research that diversified companies are much stronger. And it also makes sense if you like you say, if you go to unbanked people, but you have no one that is unbanked in your company, well, you will not know the needs of those people as
the friction.
Yes, correct.
Exactly. It's interesting. I have a story about that. It's incredible how when you unlock financial inclusion for people, their life changes very quickly. So, for example, I remember when I was at Meli, I gave this example when I did a talk there, but I'm big into boxing, right? And my boxing coach, before he met me, he lived in complete informality, right? Like he was carrying hordes of cash. He could get robbed. He could lose it, completely informal, never gotten a loan, never invested his money. And as he met me, because I worked in Meli, I was like, no, but do you have a smartphone? Then why don't you download the Pago app and then you can get a prepaid card so that you can actually deposit money in your wallet and you can use your card. And then why don't you get the MPOS from Mercado Pago so you can actually accept cards and you don't have to be carrying cash. And then he took a loan and then he improved, all the boxing equipment that he had. And all these things happened to him through technology, right?
Mm-hmm.
So that's pretty powerful. And that's something that, 20 years ago was impossible because we didn't have cell phones and the tech companies were still at a very early stage and you didn't have the infrastructure to do that.
Mm-hmm. It makes me think of I don't remember who said it, but that people underestimate international markets from an American point of view. Then in that sense that they think that the technology is not there, and I think that that's a big mistake.
Huge mistake.
Yeah, I mean, everybody has a smartphone. Everybody knows how to work with it. Everybody has, a great smartphone even. So people underestimate how much of a lever that can be for all kinds of services, and especially in Latin America than Meli and Nubank.
Of course, and even more so because what I've learned also, Kris, working for these two companies is the value proposition of fintech is inversely proportional to the bankerization of the society. Mm-hmm. Okay, so I'm not saying there's no value in fintech in the US or Europe, but the percentage of people with bank accounts that have NFC cards, and ability to pay electronically is much higher. When you go to Africa, when you go to Brazil, when you go to Colombia, to Mexico, to Argentina, the banking system is still concentrated by 5 or 6 banks that command everything in terms of market share, deposits, users, loan portfolio, everything. But there's a whole bunch of people in the fringes that are not able to access those financial services. What's changed is that these companies have a different purpose than the banks culturally as well, and they also have this as branches. So you can make, and we'll talk about it, but I just wanted to highlight it. But now with the advent of mobile broadband and smartphones, you don't really need branches to take deposits. And what does that mean is that if I have 50 reais or 50 pesos for Santander, you're not that interesting, because if you have to go deposit that to a branch, the economics doesn't really work, because I have a branch, my cost to serve is really high. But if you're Pago, if you're Nubank, I don't need the branches. So because I have a cost structure that is so much lower than the banks, I can actually make the unit economics work on the unbanked and the underbanked. And I think that's why when you look at the financial system in Latin America, fintechs are growing the pie and stealing share from the incumbents as well, because they have other advantages that we can go through, but one of them is the cost to serve, because you don't have branches essentially.
Yeah, sure. Let's go back to Mercado Libre. Is there something, a special sauce or so? And of course, you cannot tell any secrets, but is there something that you saw as an insider that, when people talk about, when investors talk about Mercado Libre, they mostly miss?
Yeah, I would say one element that is sometimes overlooked and that I discussed a lot with investors and I brought it to their attention is the fact that when you look at the founding team members at Mercado Libre, some of them have left, but many of them are still there 20 years out. And I think very few companies globally can brag about that. And it says a lot about the business and its prospects. So when you look at the CTO, the CFO, the head of Mercado Pago, the CEO, they have been around since the garage days, and they are still involved very much in the day-to-day operations of the company. And this goes to show you, at least me, that I was observing them, like how engaged they were, the passion that they put into the meetings, the discussions that they had, that they see the size of the opportunity and the incremental market share gains still very, very, very large, right? If not, they could be in the beach. So that's number one. The other one, I think that is sort of tied to this, is the fact that having such a strong founding team is also allowing them to attract and retain really, really good talent and have a very, very strong bench. So for example, the head of commerce, who is Ariel Sharfstein, which he actually was my boss for a few months. He's a superstar. He came from BCG. He had no experience in logistics, and he single-handedly managed and hired all the people who actually built the Meli logistics network in a matter of 5 years. So that type of talent, that level of commitment, I think it's because, when you have management like Marcos and the founding team being there and as involved, it's much more inspiring than going to work for a company where you have a professional CEO who maybe is more worried about, his yearly bonus than about, how much impact you're generating in Latin America through your business.
Yeah, I think that's a great point. And I think that now that I hear this, I think it also matters because those founders can discuss really hard, and they're on the same level. Of course,
and they do.
Of course, and but if you were a
fly in the wall in those meetings, they get heated up.
Sure.
And I think that's a good thing. And so it should be, So, but go ahead. Sorry.
Yeah, well, I just wanted to say, because if you're a hired gun, I mean, you will probably say, "Oh, this is the founder." Yeah, I mean, I brought my point, but he doesn't agree, or let's move on. While if you're all founders, you can fight and still go out 2 hours later after 2 hours of discussions, and still respect each other in the same way.
Of course, I'm gonna tell you an insider thing that probably is interesting for your audience as well. But when you interview with Marcos, and especially this was even more so when Meli became sort of a Wall Street darling, a lot of talent begins to want to work for you because you are the most beautiful. Everybody wants to work for you. You're growing like gangbusters. But here's the thing. I think Marcos does a really good job segregating, the type of talent he wants in the business by a very simple question. He will ask you, so, your resume is great and, you look super, aligned with the job, but do you use Mercado Libre? and that's a really big filter because, depending on that answer, you might not get hired. So if you just, wing it and you really don't use Meli, he's going to know. And that for him is a reason big enough not to hire you. If you're not a user, then that's a problem with him. And I find it phenomenal, because at the end of the day, if you're not a user, then you're more like a mercenary, right? But when he asked me that question, I was like, me, I sold my car, I sold 5 soccer jerseys, I buy all the time. I would show him the app. It's like, no, I use it all the time. So I think that's also really important. And that's something that only a founder can do. You know, do you use the product? Because at the end of the day, that's the most important thing.
Yeah.
And that's also interesting, because that's how I saw also how Meli had changed over the years. Because my conversations with investors when I started at Meli was, so how do you monitor stolen goods, right? And when I left Meli, that same investor would be telling me, I am building my vacation home, my entire vacation home on Meli. I am already level 6 in the loyalty program. I love the app. And my conversations with him, it was more about the product than even the financials. You know? So that's really important too.
Yeah, and I think that question also attracts the right people and pushes out the wrong people.
The wrong people.
Yeah.
The mercenaries.
Yeah. You know, those who just do their job and that's it. It's just the job. While, you know, if you're an avid user yourself, you want to make it better. And you can say, oh my God, this little thing, show it to everybody. I change that. You know, I said that maybe we could change this. And that's how you create ownership, right?
Of course. Ownership and a sense of belonging. That's why I have those.
And pride.
And pride. I mean, that's why for me, Meli is a very special company, not only because everything that happened to me, but because really I have a true really sense of belonging with a company because of all the things that they are doing. And the people that I, you know, develop relationships with, they're going to stay with me forever, including some of the management. So, yeah.
Well, just an intermission here. If you don't follow Fede on Twitter, you should. You know, the love for both Meli and Nubank, you know, shines through many of his tweets, and I've learned a lot from you. So thank you very much. What is your handle for people who want to follow you?
At FEDEXSTI.
You fell away just a little bit.
Sorry, it's at FEDEXSTI. FedEx STI.
Yeah, great. You know, the context in Latin America is not always easy. You know, hyperinflation in Argentina for a decade already, I think, or longer. Political risks in Brazil and other countries. You know, lately slower growth, and still Mercado Libre and Nubank are
puncturing through that.
Yes, are completely, you know, completely booming and multiplying every few years and in revenue. And so can you explain the two poles of that, the positive and the negative, and how they weigh them?
So look, all these, so when you talk to me about, you know, hyperinflation and political risks, I actually see it like a moat, because Latin America is very widespread geographically, and it has very challenging dynamics, right? Politically, geographically, socioeconomically, but it's a huge TAM, right? A total addressable market. So it's almost 700 million people, or reaching 700 million people. And it's Meli's bread and butter. Meli is not going to go to Europe. Meli is not going to go to the US. Meli is not going to go to Indonesia. This is their bread and butter. So they've adapted to operate in an environment that has made them incredibly unique. They've built the pipes in every country for payments. They've built the logistics infrastructure and the technology behind it. So, and what's interesting is that you can't just throw the Amazon playbook in my zip code. Give you an example. So, you know, you can't be like Amazon and be like, you know what, I'm going to build a distribution center, and in order to keep my costs down, I'm going to just throw a whole bunch of Kiva robots into the DC, and then we're good. No. In my region, where you have red tape everywhere, if you were to do that, you know, at the next hour, you would have the head of the, you know, logistical union workers shutting down your distribution center. So the ability to have government relations, to be able to work in a region where you were born here, so you had to be born basically solving these things, actually give you an advantage. I would say the fact that my region is like crazy difficult gives you a little bit of a moat in the sense that Meli has cracked many of these things around logistics, around taxation. Bear in mind also in terms of inflation that, especially for Mercado Libre, it's a take rate business. So if the iPhone goes up 10%, you capture that on the commission. So inflation doesn't necessarily hit Meli as it may hit other players, because automatically in that take rate, you capture the price increase. So that's number one. But I would say there's another two that are more structural that also explains, the success of Meli and both Nubank, I would say. Number one is the smartphone penetration across the region, which basically enabled a significant portion of the population to purchase online for the first time because they didn't have a PC or a laptop, right? And that's super important because, before, especially in places like Mexico, where access to broadband was only for a few, that sort of put a lid on the growth. So as smartphone penetration increases, you've seen all this growth, and this trend is only positive and will continue to increase. So that would be number one. The other one is that there is still a shift in penetration gains of online commerce relative to physical commerce. So it's around 10% today, roughly. That is expected to grow. So the increased smartphone penetration is sort of trumping the macro headwinds because your shift to online is stronger than the less consumption. So when I would explain to investors at Meli, and I did the exercise, and it's probably still valid, is what would be the correlation between local currency GMV or gross merchandise volume versus local currency GDP? And the correlation is very little. And it's because of these factors. So not necessarily because the economy begins to slow down, you would see a deceleration of Meli's business for these factors, but also because the beauty of the marketplace is that you can also jump in the platform to sell. So if your income is coming down, maybe you begin to complement income by selling on the platform, and that brings growth to Meli irrespectively. Yep. So because you're still feeling these secular trends blowing really strongly, even more than in the developed world, because the penetration in the developed world is closer to, mid-teens, maybe 20s, like in South Korea, you still are sort of insulated from the macro challenges in the region.
Yep, that's a great answer. So let's transition to Nubank. And, first question, how was your transition from Mercado Libre to Nubank? Yeah. How did it come? Why did you want to join Nubank?
Yeah. So, look, let me tell you first why I joined. Honestly, Nubank was a company that I had been following for a long time because of my job at Meli. So increasingly more and more investors asking me about Nubank. I had to educate myself, understand their business model, what they were doing. So it's a company that I followed and I respected, especially because of their Net Promoter Score, which was obscene, right? We're talking about 80 in Brazil with 70 million customers, 90 in Mexico.
91 even in Mexico. So
that's higher than Tesla and the iPhone.
It's crazy. It's nuts. Crazy.
It's nuts. Yeah. But it
for
happens.
A bank.
For a bank. How many banks do you know in the world that people are in love with? People love Nubank. Like there's a love to the brand. I don't hear people, I love Bank of America and I love Goldman Sachs. People love Nubank. There's like a personal relationship with it. But so I followed it for a long time. I thought really highly about it. And I also had a feeling that they would call sort of my door because I really was a really good fit and I could really hit the ground running because I worked at the largest tech company. So that's how, why did I want to join Nu in a sense is because I had the knowledge, but also the other part of the answer is, what made me jump is the challenge, right? So it was like climbing a mountain in the sense that, ever since I was like 16 in high school, I always dreamed to be involved in an IPO in Wall Street. And this was the IPO, not only because of the amount to be raised, which is close to $3 billion, but because we did a concurrent listing in New York and in Sao Paulo simultaneously with one of the largest gifting programs in the history of IPOs. So the level of complexity, the breakthroughs being done in this IPO in terms of financial inclusion, Nubank, to its IPO, increased the percentage of retail investors from like 3% to 6%. So it doubled the amount of people investing in the stock market in Brazil through the gifting program and and the customer. It was a gifting program to customers, as well as it was a gifting program and
well, maybe could you just I think I know what you talk about, but many people will not know what the gifting program was. Could you
right? So
explain very
basically,
shortly?
what Nubank wanted to do is, on top of doing the IPO, they wanted to share and increase the education of their customers investing in the stock market. So what Nubank said is, look, I will give you one BDR of Nubank for free. BDR is the Brazilian Depository Receipt. I will give it to you for free at IPO.
That's one sixth of a share, right?
One fourth.
All right. So,
yes, 1/4 of a share. I will give you 1/4 of a share, and I will keep the share. I won't let you sell the share for 1 year. And in that year, I will educate you and have you understand what is risk, what's investing in the stock market. And the idea was not only for people to feel comfortable investing in Nubank, but saying, wait, there's a whole thing about the stock market. Not only if I buy Nubank, I begin to invest in other things. So the idea is to generate more people, retail investors, investing in Brazil. So it's very revolutionary because it hadn't been done in that way in Brazil, such a large gifting program, right? Mm-hmm. At the same time that you're doing a concurrent list IPO, both in Brazil and in the US.
Was it about $200 million?
It was 300 million in Brazil,
yeah,
and it was 2.7 total. So
no, the gift. I'm talking about the gifting program. Was that 200 million shares that the company bought, something roughly like that?
Yes, yeah. yes.
I mean, I thought it was extremely impressive. Indeed,
I saw the results.
I saw the results. Indeed, doubling the people, all the people in Brazil that invest in stocks were doubled. And it's still low, but doubling it in just like that is crazy.
But those are the things that founder-led businesses can do, right?
Oh yeah.
So that's something that David was very specific about. That he's like, I don't really want to do an IPO because it's the next stage of the company, but how do we generate impact with this? So he was very specific about doing this. But to your question, also why did I decide to jump? Which I wanted to wrap up that question is, what I learned at Meli is that you learn the most when you're away of your comfort zone. And I had been at Meli for like 6 years, overseeing IR during the most transformative period of the company, like I mentioned. And I wanted to move things around, and this checked all the boxes. So, in hindsight, yes, I miss Meli very much. And I feel I was born for that chair, but it was just too good to pass given everything that I had done at Meli before.
Yeah, I understand that. Now, could you maybe just describe for people who do not know Nubank, because it's, Mercado Libre is probably more known than Nubank. It's still not that long on the stock market. Can you describe what they do? And I will ask you the same question. What do you use it for personally? Are you a customer?
Yeah, I'll answer the question. But so Nubank is one of the largest digital banks in the world in terms of customers, already north of 70 million. Today, the lion's share is in Brazil, then Mexico, and then Colombia. What's interesting about it, and then we can get more into the weeds, but is that it has unique advantages around the cost it has to serve its customers, so it can make the unit economics work on the people who are the least well served by financial services institutions, so the unbanked and the underbanked. But it also has very unique next-gen underwriting capabilities that is making it to be a force to be reckoned in Latin America, because it's able to lend and to give unsecured credit to the lower segments of the population where the yield is, with very good economics. And that's the consequence of having, a very, very robust credit engine that was a lot inherited from Capital One, but it's everything in the cloud. They have about 20,000 variables per customer, and they have an underwriting that is always on. So they're always evaluating, am I giving you the right credit line? But what's interesting about Nubank is that, it's accelerating financial inclusion at a breakneck speed. So north of 20% of Nubank's customers were completely outside of the financial system. And what they've done is, now that they have a strong foothold in these 3 countries, they began to move from not only, offering you a bank account, but offering you credit products, whether it is a credit card or a unsecured loan or a secured loan. But also they moved into insurance, so offering insurance products with a very simple angle designed for normal people. So usually the people who need the insurance most are the people who get it less because of the complexities of understanding the insurance product. Nubank's life insurance product is one of the most successful in the history of Brazil, selling like 500,000 policies in a matter of like 3 months. And then finally, they've also ventured into the investments world, where they offer you the ability to also invest in crypto, in equities, in funds. So it's a whole ecosystem of financial services, which they've been able to improve through a very, very good user experience, and with specific advantages around cost to serve, cost to acquire, cost of risk, and cost of funding that make it a very, very compelling value prop. But we can get into that later, because I think it's one of the questions. Now, how do I use it personally? So because I live in Argentina, right, where Nubank doesn't operate, I don't use it now. But while I was at the company, right, when I traveled to Brazil, I used it to solve all my finances. And what's really interesting about this is that actually I was able to see how the credit engine works. And it's really, really incredible. So when I got my card, because I am Argentinian, I'm not Brazilian, there is no credit information on me in Brazil. So I started with 0 reais on credit. I started with a debit card that I could deposit money, but no credit limit. Within the first week, I had paid a few things. I rented the car, right, with my Nubank card. And within a week, I already had a 200 real credit limit, which is small. What I'm showing you is how, if I can't find information
$40, I think.
Roughly. Yeah. But what I'm telling you is they have their own credit scoring system, and you can begin to build credit with them. And then you will begin to bank more and more with them. And you can see that in the curve. So as the cohorts mature, the people who got 200 reais credit limit may go all the way up to 2,000 or to 10,000 as they make more money, as the risk profile improves, and your stickiness is much higher. So if Nubank, this is something that is very underappreciated, but if Nubank would pull the brakes right now on the customer acquisition engine today and stopped acquiring customers, you would see the profitability per customer increase significantly just on the maturation of the cohort. Because the more you use, the more information I have from you, the more information I have from you, I can give you a higher credit limit, you spend more, you make more money, and so on and so forth. So that's something, that sometimes is a little bit underappreciated, but that's how I used it. I used it like my bank in Brazil, so to pay for everything.
Great. One of the things I was very impressed about was Nubank's marketing. And I mean, they make getting a credit card something really special. For example, they have beautiful packages. They have, they really make it an event. They have a beautiful color as well. The purple, or how do they call it? It's not purple. It's
Roshinha.
Yes. That was it. And then they have a special feel to it. Can you relate to that?
Yeah, I can relate to that. So the way that this started, and they realized that it was such a phenomenal value prop, is back in 2013 when the company was founded. The reason why it was founded, it was because David was working at the time for Sequoia, and he couldn't understand how people would, have to wait in a bulletproof door, being treated like a convict, to go and deposit your dreams, which is your savings. And to get a bank account, you would have to go 4 times to the bank, provide a whole bunch of information to get a credit card with a low credit limit, and you're paying hundreds of reais per year in fees. So a very simple concept of having a credit card, no fee, tied to an app, was very revolutionary. And it served them very well, because what happened is, first of all, the purple card people liked it because it was very different to what was there in the market. But secondly, is that at that point in time, there was no other player that would give you a credit card that you could manage everything from the app. Spend it, you could lock it, you could see all your expenditures. You didn't really have to be or talk to a human being. That was pretty revolutionary. But what happened is that because of funding, right, they couldn't say yes to everyone. So what they did is, they were rejecting at that point in time, because they didn't have the Nubank account where they can give you the debit, the bank account, generate data on you, and then cross-sell you on the credit. They basically said, okay, I will put you in a waiting list, and as I have, more information on you, I will open the faucet. So it created a halo of exclusivity of people wanting to have the purple card, that essentially what happened is the word of mouth engine has been so effective that the marketing spend of Nubank is virtually zero. Till today, like 70 to 80% or more of the customers are coming from word of mouth. So
yeah, I
Kris
read
telling Fede,
I read in the S1 that it's more than 90%, or it was more than 90% at the time. So that was
yeah, at the
incredible.
time. Now it's a little bit less, which makes sense, but still the customer engine, and this is not paid. So it's really me saying, this is such a great product that I want my friends to have it. And the quality of that referral is much better than Google or Facebook. So Fede, recommending you will give you a risk profile and a customer that's far more sticky than one that I'm bringing from Facebook or Google or one of the digital acquisition engines. So when you look at the customer acquisition cost of Nubank, is roughly between $5 to $6, but most of that is the shipping and the printing of the card. Only 20 to 25% of that is marketing. And what's interesting about it is that most fintechs will show you their CAC without the shipping of the card. Nubank's all in is $5 to $6 because most of the marketing is done via word of mouth. Now, do they do some marketing? Yes, they sponsored the World Cup, but it's not the way that Nubank scales. And what's interesting about that, Kris, is that all the money that they save in marketing because of the word of mouth, it gets deployed into product, into customer service, into automation. So it's like a reinforcing process where, the more I grow, the more I save, the more I can invest in a better product and have an advantage. And, it's like this virtuous cycle that never stops.
Yeah. Yeah. And I mean, I live in Europe, and but even when I saw, everything, all the marketing, I wanted to be I wanted to be part of it. It feels like a movement.
What they are is an incredible design company. So when you look at the app, when you look at, the F1, it's like a work of art. It's a design company as well. Like they're very heavy into design, into the looks, into the user experience. I would say even more than Meli, but Meli too. But the obsession at Nubank is it's really hardcore. Nubank has their own programming language, their core banking system. They're completely vertically integrated. So it's like a really, really next-gen tech company rather than a bank. But a lot of the savings in customer acquisition that a lot of fintechs don't have because they need to burn money in marketing, Nubank doesn't have that issue. And that's been able to translate into Mexico and into Colombia as well.
Yeah, and again, I think you're hitting the nail on the head there with the word design. I think the design of Nubank is it's a bank, and it feels so hip, a hip bank. Normally those clash, but
here's the thing, because I wanted to make the distinction. Nubank is not a bank. In fact, if you look at Brazil, the bank is gone. It's new. Because Nubank sees itself as a tech company that started in financial services, but they're not really a bank. And I discussed this a whole bunch with investors, that the mindset and the optics, if you look at Nubank with the optics of a bank, you're never going to understand it and you're never going to get to the valuation. But when you start to look at it like a platform and a tech angle to it and what they do, and how incredibly difficult this is to build, then it starts to look a little bit different than a bank.
Yep.
It's not just a nice app.
I'm going to ask the same question that I asked from Mercado Libre. So you work with David Viles and Christina Junquera. Did I pronounce that correctly? Junquera. Yeah. How were they, and how would you describe them, and what did you learn from them? And
look, I think that I did work with them, and I think both David and Christina complement each other really well. They complement each other really well. Just to give the audience a little bit of context, because Christina comes from the banking industry. So she was the head of credit cards for Itaú, which is one of the largest banks in Brazil. And the reason that she went to David to found Nubank is because when she proposed a Nubank to Itaú, they almost laughed in their face, right? So because they wouldn't listen to her at the traditional banks, she started to listen to David, which was sort of the dreamer, the entrepreneur, the person with the idea of disrupting the system, right? To build Nubank. So there was a big complementarity in terms of, outsider coming from Silicon Valley with the disruptive idea, and the insider who knew the credit card market like no one else, like Christina. So complementarity in terms of drive, but a lot of similarities in terms of bias to action, customer obsession, humility, being frugal, right? Being humble. And they also lead by example, and they listen. So they don't lead, vertically. They lead horizontally. So they listen to everyone in the company. They speak to everyone in the company. So I think, they have a very similar traits than Meli, in the sense that, they're in it for the long haul, and they are really there to generate impact, and then as a consequence make money, but not the other way around.
Mm-hmm. I heard a great interview with Christina, which she said, there are so many companies, not just in finances, so many, but generally, so many companies making new features and new products, and they do it internally just because it's possible, but they do not listen to their customer. And I thought she was really, really, really focused on what does our customer need, want, etc.
It's incredible. I'm going to give you an example, 2 examples. I think the audience are going to like it. One, it was around a customer service agent who realized that the person that had a problem with the Nubank account was traveling to Italy. And the customer service agents of Nubank are empowered to take decisions on their own. So the customer service agent
that's already revolutionary.
Sent by mail, sent by like FedEx, a whole guide to traveling to Italy, because she heard on the call that the customer is traveling to Italy. So there's a whole point about delighting customers. That's number one, which I'd never heard of. Incredible. The second one, which I was like, it blew my mind, and I was like, okay, these guys, they think differently. I'm a very curious person, especially when I started at Nubank. I wanted to make sure that I understood, like the guts of the business. And I was just as a fly in the wall in a product meeting. And what had happened is the amount of revenue from interchange started to grow abnormally. What do I mean by that? So not interchange, from revolving. When I say revolving is when you don't pay your card on time, they will charge you interest on the balance, right? Just to level set. So what had happened is that because of a bug, the push notification that said, hey, Kris, in 3 days, you need to pay your card. The customer didn't get it. So they didn't pay the bill. You know how long it took to reinstate the push notification? It took like less than 30 seconds. I don't think that decision at Santander, at Itaú, would have taken 30 seconds. They probably would have left
30 days that would probably be seen as something as a.
But see, that's part of the culture. But that's part of the culture. Customer centricity, obsession with the customer, listening to the customer. So they're minor details, but they're not minor.
Yeah, they are very important, and people also feel that, even if they cannot put their finger on it, they feel that, I think.
Oh yeah, they do. That's why they love Nubank. That's why the customers love Nubank, because of these examples.
And that's exactly what I also got. That feeling. That feeling of this. As I said, it's more like a movement actually than a company almost. In a good way, of course. It's not
in a good way. They even have. I'm starting to remember my Nubank days, but they even have a metric. They even have a metric called fanatical customers, and they have a goal of how many fanatical customers they want to get by X time. And the fanatical customers, they meet like certain criteria. They have 5 or more products, they engage with the app every single day, so on and so forth. So they even have a metric about, we need to get to X fanatical customers, and they have a definition of it.
Yeah, well, I think they also talked about daily average users, which is great for a bank, right?
They have social network type DAOs.
Mm-hmm. Mm-hmm. Yes, indeed.
It's nuts.
Indeed.
It's nuts.
So, do you think that new, I will call it new, will go outside of the 3 countries they are in right now? Will they come to Argentina so you can use it every day?
So I'll answer the question, but I'll give background. So they actually came to Argentina. In 2019, when Argentina was still governed by, rational people, David decided to come to Argentina. So they were going to open up shop in 2019. And then when Mr. Macri lost the election, and it was clear that potentially the regime that was going to come in was not as business friendly, they sort of pulled the plug. And they decided that it probably wasn't the best capital allocation decision right now to come to Argentina. So maybe eventually. But to your question, I think it's sort of a two-part answer. So of course they will. In fact, they have an initiative internally that's called platformization, where what they're doing is they're building the tech in a way that they can deploy with a couple $1 million and a connection to their core marketing system in any geography within 1 month. So they could deploy in Africa or Indonesia or, you know, Moscow, irrespectively, because everything is standardized. And this is a company-wide initiative. So that's number one. So, but what I would say is, look, today is probably not the best idea for Nubank to move away from Brazil, Mexico, and Colombia, because there is still significant penetration and market share gains. I can make an argument that you can build $100 billion company only in these 3 countries. Now, when in Latin America, when you move away from those countries and you exclude Argentina, the market size, it starts to be a little bit compressed. So David always says, I like fishing with dynamite, right? So he wants to go to large TAMs. So I think potentially, if things don't get better in Argentina, I would not be surprised if Nu enters either other emerging markets in Africa or Indonesia, or perhaps even the Hispanic market in the US, which is extremely poorly served by the incumbents. So in Hispanics, banking penetration is way lower than the average. The amount of financial services they get is much lower than the average. So there's a question around brand awareness and ability to serve those customers better than the incumbent banks. So I think 2-part question, short term, probably not. If you ask me this question for 5-7 years, absolutely.
Yep. And if there's something you can talk about, you know, what could still be made better from, you know, their product offering.
Yeah, of course.
If anything.
Yeah, no. I think there's still a lot of room to improve in terms of. So what? This is a great question. So one of the metrics that Nubank uses to understand if they are, you know, winning or not is the proportion of customers that are primary bank account for Nubank, which defined in Nubank terms is if you have more than 50% of your income with Nubank. And how does Nubank know that? Is because you have to give your tax information and your income information. So they have a way of calculating that. One of the big reasons that some customers do not adopt Nubank as their primary banking relationship is because you don't have enough services, so I can leave Itaú altogether. So, you know, when I think about the amount of products that you need to offer, right? In Brazil, it was almost 3 for a very long time: bank account, credit card, and personal loans. You probably need, you know, investments, crypto, you need insurance, some e-commerce, some secured products. So what's missing is that they need to continue to work so that they can close the gap in terms of products related to the incumbent banks, so that those who are evangelized by Nubank but that can move away entirely do so. So I think it's just a question of time and execution.
Yep. I understand. And I'm coming back to the diversity. You know, we already discussed when we talked about Melly. It's also very rare to see a company with 3 founders, 3 co-founders who all have a different nationality
and skill set.
So can you talk about the interaction there between the 3?
Yeah, I think it was phenomenal, because if you look at Ed, Christina, and David, they all bring different abilities to the table. So David, he had the vision. He realized that, you know, people banking in Latin America is not the greatest experience. So there's huge friction to
and that was first-hand experience indeed, because that was very, you know, that the S1 or the F1 actually starts with that anecdote. You know, I had to go 4 or 5 times, and it took me months to get a credit card. And when he came to Brazil,
when he came to the first slide in the roadshow when we were doing the IPO it was extreme, but it was on purpose. So it was a picture of this guy shirtless in this revolving door in a bank, and on the other side of the door you had a guard with a gun. And we started the presentation being, look, this is banking in Brazil. So this would be like going through security in TSA in the US, or this would be like going to prison. But this person only wanted to get into the bank, but the keys, the metal detector, and he only wants to bank. So, you know,
as I already said, really smart marketing. That company really is so full of it. So
They're really smart,
full of great marketing. Every detail is
every detail. And what's interesting is that, and even you read that in the F1, is that Nubank will operate wherever there is friction. So you could even make a case that Nubank can disrupt the airline industry, the telecom industry, any industry that has low NPS and a lot of friction. They could do it, because at the end of the day, there's this customer obsession around reducing friction. But if you look at the three, David, Christina, and Ed, David, visionary. He saw the opportunity, comes from Silicon Valley, very tech mindset. Amazing. Then you have the insider that knows Itaú, which is like the dark side, better than anyone, because she worked there for like a decade. She mastered the credit card business. And then you have a genius like Ed, who is a software engineer who developed Clojure, which is the programming language for Nubank. They had its own programming language. And when you put them together, they agreed on the vision, and each of them had a very specific role to meet to basically build Nubank. So if one of them would have been missing, Nubank would probably not be what it is today, or even exist in a way, So I think it was like a meeting of the three, correct people to actually go out and disrupt one of the largest markets in Brazil. You had the outsider, you had the insider, and then you had the technical guy who actually did the coding.
Yep. And one of the things that I also really like that they have acquired, three companies, I think, and those were tech companies. Those were not. There was one a broker, but also very technical, and the other two were just pure tech.
Easy Invest, Olivia, and Juntos, I think.
Yes, and that's also something that stood out.
But they were very strategic acquisitions. So Easy Invest was the largest online platform in Brazil, which complemented the business of Nubank, right? And there was cultural fit and overlapping customers. Check. Then you had Olivia, which is basically a lot of functionality it's a company that was founded to do a lot of functionalities in Pix. So Pix is sort of for the audience, is sort of the payment rails that the Brazilian Central Bank has created in Brazil, similar to UPI in India. And what Olivia is doing is they're doing, BNPL
and similar to
rails.
And similar to what the Fed is doing now with Fed Now.
Yes, right. Exactly. Which has accelerated significantly.
Which again shows that, developing countries can be much faster than developed countries.
because the status quo in the developed world is much higher. In Latin America, you still have people who have never had a bank account. So the value is much higher. The impact is much higher.
Yep. Sorry, but I interrupted you. You were talking about Pix.
Yeah, so basically they acquired this company because they were doing really interesting stuff around Pix. So BNPL on Pix rails, fraud prevention, and all sorts of things. So the acquisitions that Nubank has done is really to complement sort of their tech stack, but with a very thoughtful process around post-merger integration, around, communication of technology, and so on and so forth. So I think they've been tuck-ins rather than something very transformational. I think most of the things at Nubank, as it is in Meli, they get built from the ground up, built to suit.
Yeah. And I think the biggest acquisition was Easy Invest at $400 million, something like that. So, except for the market size, maybe, are the opportunities as big in Mexico and Colombia as in Brazil, do you think?
Yeah, look, obviously Colombia is smaller, but if we take a look at, Mexico, I think it could have the potential to be even at the size of Brazil or even larger. Why? Because when you look at GDP, they're very similar. When you look at population under 30 years old, actually Mexico has a higher proportion than Brazil. Brazil is at like 40-something%, 44, I think, and Mexico is at like 50. So demographic dividend of people who usually adopt, fintech services, you're going to have all those people adopting you, and as they progress in their work life, banking with you. When you look at banking penetration in Mexico, is like in the mid-30s. In Brazil, is in the 70s. When you look at credit card expenditure as a percentage of total expenditure, Mexico is 10%, Brazil is close to 30%. So Mexico is sort of where Brazil was 10 years ago in terms of financial sophistication. But what David always argues is look, if you cross the border, like bankerization is, 95%, and then you cross the border and like, I can't pay with credit card. So someone's going to crack it. So I think Mexico is a massive opportunity that will have multiple winners, not only Nubank, potentially Pago as well. Colombia is a smaller country, but I think it's still very relevant because it still has metrics that are interesting from a fintech standpoint. So there's still a low proportion of credit card expenditure as a percentage of total expenditure, roughly 15%. You have like mid-teens credit card penetration. You have a GDP per capita that is a little bit lower than Brazil and Mexico, but still interesting, and a population and almost half of the population under 30 years old. So those are all, and also you have the three countries, interesting as really as well, are very tech savvy. So, users of WhatsApp, Brazil and Mexico are like number 2 and number 3. So very tech savvy individuals, young, low penetration of the services, give you, a potential for a very large business. That's why that I said, I think it's the right move for Nubank today to focus in Brazil, Mexico, and Colombia, because you can drive a huge business and then you can move into other geographies. What you don't want is to stretch yourself too thin, either from the funding side or from the execution side, no?
Yeah, I agree. So one of the things that, one of the bear arguments is a credit risk for new. The default rates, that's what you hear. Default rates have increased so much, or they have almost doubled or whatever. I looked it up and it was still just 4.1%, which is in this market, I think, still very low. So what are your thoughts about that?
Yeah, look, so yes, they've gone slightly up, but this is a dynamic that I would attribute for the most part to things going back to pre-COVID. So when COVID happened, government handouts were given to the population, and that sort of artificially brought down the level of default. No, as things have normalized and the world has opened up, the government handouts have subsided, and we've gone back to the default rates that were somewhere around the vicinity of what they were pre-COVID. Now, if I compare the default rates, especially, and you can do this in Brazil because you can segregate by minimum wages. If you look at people that have, less than 1 minimum wage, 2 minimum wages, 3 minimum wages, the gap in NPLs is still even higher than in the people who have, 10 minimum wages, because lending to the rich is very easy, like Xpe does, like they have a secured card against your portfolio, because if you don't pay me back, I grab your stocks. Now, the difficult part is when you begin to lend to this segment of the population where you have the higher risk. So yes, it's gone up, but I think, one of the reasons why I believe Nubank has an edge relative to other players and mitigates this risk of uncollectibility increasing is for 4 reasons. Number one, Nubank has data. So not only they use income data, but they use behavioral data. So for example, who referred you to Nu? How quickly you use your credit limit? Do you use it in booze or do you use it in Ubers? Who you pay? So are you paying, risky merchants, or are you paying, the supermarket? How fast you read the contract? At what time you read it? What type of phone do you have? Where you activate your card? How many zeros how many numbers does your email have? So Kris at 1355@gmail.com is much riskier than Kris@gmail.com. So number one is data, actionable data. It's not like a slew of servers like Itaú or Santander has, but everything's centralized in the cloud. So that's number one. Then they have methodology. So like I said, there's an always on underwriting engine with about probably close to 20,000 variables now, where Nubank's algorithms, there's no humans doing this, are all the time asking themselves, am I giving the right credit line to Kris? Because if I give him too much of a low credit line, he's not going to use me because he can't buy stuff because his credit limit is low. If I give him a high credit limit, I might get him over in debt because he doesn't know how to use the product. So there's a question around, methodology of credit underwriting. Then you have the tech platform. So something that also gets underappreciated about Nubank is the fact that Nubank spent the first 5 years of its history building a technology platform that could do credit at scale, okay? They didn't do where they have their own core banking system, the credit card processor, and even their programming language, like I said. They didn't do anything else but credit. Why? Because it's easier to give people money than to take people's money through savings products. But if I give you money and you trust me and you pay me back, then I can cross-sell you very well. So the tech platform is not minor. And then finally, what I said, briefly before is the culture. So because there's a culture of experimentation, of testing and failing and losing money to learn, that allows them to pivot and adjust very quickly. I know for a fact, because Nubank has hired data scientists from the incumbent banks, that their ability to test, learn, and scale is super limited. And this experimentation culture, I can't put a value on it, but it's very important. So long answer, but that's why I have a level of comfort on the default rates that, you know, doesn't really concern me relative to other players who are less sophisticated and have, you know, less actionable data.
Well, and maybe just to paint a picture, because investors in the US, may think that it's more or less the same as in the US, but it's not. I think I read that only 20 or 25% of Brazilians had access to loans from the big banks. From the big banks, I have to say.
Exactly. And here's another thing, another nugget that's really interesting. So first of all, they have a whole bunch of people excluded from the system that could potentially be in the system. But the other thing is that if you grab all the social security numbers that Nubank has, right, and you take them to the central bank, Nubank's customers account for like 30% of the loan universe in Brazil. You know what is the market share of Nubank in personal loans? It's like 3%. So they can fish in their own bowl for a long time and refinance at a better rate, which they do, with customer acquisition zero, because they already know they have a loan. You can send a push notification and say, hey, you have a loan with Itaú that's paying Y. Why don't you refinance with me at Z in one click? And by the way, you can cancel whenever you want, and you don't need to come with your wife to the branch to do any changes. You can do everything through the app.
Yep.
That's also really interesting.
That's a great advantage. That's a great advantage. And do you think there is some sort of, let's call it bank run risk? That so people.
No. Yeah, not really, because I was very surprised about the lack of sophistication of asset liability management of Silicon Valley Bank. Like, just basically they were invested in all these long-term treasury bonds with the deposit money that could be collected at any time. When you look at Nubank's asset liability management, it's a lot more sophisticated. B, they have way more deposits than they know what to do with. So if you look at the deposit to loan ratio, deposits are like 5x the loans, number one. And then number two, so I don't think they will have an issue like that. And all of the customers' deposits are regulated by the Brazilian Central Bank, and they can only be invested in very high liquid short-term securities. So a run on Nubank, it's very difficult because there is a very prudent asset liability management. And by the way, they also have like $4 billion in cash. So on top of that, they have ample liquidity to cover any type of run if that were to happen, which I find it unlikely.
Well, I have to say I investigated this myself as well, and I think I agree with you that it's very unlikely. If there would be a bank run, it would probably be one of the big banks, faster than Nubank. That's
it's interesting because when COVID happened, so just to show you how people have changed their perception about digital banks. Let's see if I can say this right out of memory. So when Nubank, pre-COVID, when you ask people, Nubank always asks its customers, why do you come to Nubank? And more importantly, why don't you come to Nubank? And pre-COVID, the answers were because you have no branches, because you don't have enough products, and I can't remember the third one, but because you have no branches, it was number one. If you fast forward to post-COVID, because you have no branches went down to like number 6. And number 1 was because you don't have enough products, which is why I told you why more people don't come into Nubank, right? But the whole perception around trust and having a branch and all that, it's diluted away post-COVID. Not having branches is not a gaining factor for you to bank entirely digitally.
There was also some sort of scandal in Brazil about the high stock-based compensation. It was 804 million Brazilian reals, so about $167 million. What's your opinion about this? There are lots of nuts and bolts there, but
there is. But I do have I do have an opinion. So first of all, we need to take into consideration that most of David's, let me backtrack. So first of all, we're talking about the contingent shares, and this has been entirely been put to rest because this has been terminated. Just to show you the level of commitment that the management has, they decided to do away with the contingent shares. But let's imagine that they kept that program. First of all, David's and other executive compensations was linked to the performance of Nubank's shares, meaning that he gets or they get paid in a way that is commensurate with the long-term success and therefore with Nubank's shareholders. So CEOs at other companies, compensation can be at the expense of shareholders. I think the contingent share awards, mostly from David compensations, are as shareholder-friendly as compensation gets. The thing is that the amount was very large, but to get to that amount, the value to shareholders would be obscene. So that's number one. The other one is that I think...
By the way, I also looked into the terms and conditions there, and I really liked it because there was a double condition of it has to be above that level, and it cannot be under that level for, so that was quite strict, I thought. I had never seen it before.
Me neither, and I would discuss with investors, especially with ESG investors, but like when you look at the compensation, it was designed so that decision-making is aligned with the long-term interests of Nubank's shareholders and with the other stakeholders. So it motivates and rewards David and the other executives when they think long-term and achieving goals to maximize shareholder value. So if we put it another way, the compensation is designed to discourage short-termism, right? So for me, there was a lot of noise in Brazil because the amount was so large compared to the Brazilian CEOs. But what no article at the time said is that if David got that $100 and something million is because the stock price of Nubank was like at 20.
Yep.
Right.
It was. So, yeah. Well,
imagine the shareholder value.
Oh yeah.
So imagine the shareholder value.
Sure. I completely agree. Actually, I completely agree. But I wanted to hear what you thought about that.
Of course. No, and it was a really hot topic in the middle of the IPO because this came out right in the middle of the IPO.
So that was your personal problem almost. Yeah. Do you think that Mercado Pago and Nubank or Nu will become direct competitors? So in other words, could Mercado Pago also function as a broad banking like app? And how
it does already.
Yeah. And so how will they compete?
Yeah. So look, I think when I look at the fintech space, I think I look at it like in two stages. The main competitors of Pago, of Nubank, of PagSeguro, all these fintechs is the incumbent banks and cash. So let's remember that today in my zip code, about 3/4 of transactions, not payment volume, occur in cash. And that, pick your country, Argentina, Brazil, Mexico, Colombia, Chile, whatever, 5 banks own 80% of everything. So I think in the next 5-6 years, I think the main competitors are going to be the incumbent banks and cash. Now, I think that in a longer time period, because in my view, retail banking is going to be better served by tech companies than banks, retail banking, not corporate banking or sovereign banking, there could be some competition. But I'm not that concerned because when I look at the fintech space, right, there's multiple players that could do well. Just like in the financial services sector, you have multiple insurance companies that do well, multiple banks that do well. In e-commerce, I would be more concerned because when I look globally at e-commerce, it tends to be more concentrated. Mercado Libre, Amazon, in China, JD, Alibaba, Rakuten and Amazon in Japan. But in fintech, no. So I think, right now is more of a land grab of the existing customers of the banks who are not well served, and then the boxing coaches of the world that still are in the fringes. So, but eventually they will compete, but I think that's more down the road. Right now, there's a lot of share gains from cash and incumbents.
So, to build on that, where do you see Nu in 2033, for example, in 10 years? So how will it look? What will have changed?
Look, I see Nu in 10 years from now, as a clear leader, at least in Latin America, in terms of providing digital financial services. So I would expect their market share in credit card, in personal loans, in secured lending, to be very high, okay, which is not today, but except for credit card in Brazil. But I would expect in the core countries to have a very meaningful market share. I would also expect them to be a very relevant player in some international locations. I think the jury's still out there, whether it be Africa or US or Indonesia. But I think there's also an angle around being able to provide other services or remittances or e-commerce, which they do already, but at a larger scale. So I think, long story short, is I would see both. I would see both Pago and Nubank as some of the largest, if not the largest, digital financial services providers in Latin America, with Nubank, not Meli, having some foothold beyond Latin America.
Yep, great. And then the third step, your current position. So Spider Investments, what does it do, and what's your role?
Yeah, my role is, so essentially, I met the founder many years ago. I've been following the startup for a while. It's bootstrapped, so it's been basically grown through the capital, through the revenue and funds that the company generates. It has two shareholders. But what it does is it enables people globally and even in the US to invest in real estate assets in non-traditional markets in the US with rental income, with very little friction. And all through an app. So it's got a component of prop tech, but also a fintech, because the rent gets deposited into your app, and then you can use those funds to cross-sell to other services that we offer, like fixed income investments and others. But essentially, I think what the value prop is when you are in countries like mine with high inflation, where there are not very meaningful alternatives to save in hard currency with steady income. I think there's an opportunity around building a way to use rental income and properties in the US sort of as a bank, all centralized through an app. So is it going to have the scalability of Nubank? Probably not. But when you look at the revenue per user, a user at Spider, one user equals 50 users at Nubank, because they're buying a property, either fractionally or a whole property. So I think it's a very interesting business. But what they brought me for is to put the house in order, first of all. So define the core metrics, build a narrative, build a deck, build a model, and then go out and do some fundraising to accelerate even further the growth of the business. I liked it too, because this is a challenge, in a sense. I had to leave Nubank for personal reasons. I didn't leave because I wasn't happy there. Unfortunately, I had family issues that I had to take care of.
But what I like about Twitter.
But what I like about this is that now I'm not sitting in the shoulders of giants. I'm not sitting on the shoulders of David or Marcos. So it's like a challenge. If I can do it from here with a company that still hasn't raised any money, but that I believe in the business model, then I've done it in both ends. And what really encouraged me to do this as well is, first of all, I have very good fit with the founder. Second of all, I can generate a lot of impact in the company because I'm on the management team and it's still a startup. So there's not a lot of bureaucracy.
You're sort of a founder now yourself.
Exactly. And then number three is that when I went to Money 2020, like 6 months ago, and I showed the app to the bankers that did Nubank's IPO, all of them had the same reaction. They're like, this is really cool. So I was like, okay, so I'm not the only one who saw something that is very unique in terms of business model, especially catering to people in emerging markets. But there's a lot of heavy lifting to do, right? It's a startup. I was used to having, a whole bunch of people doing things for me. Now I need to build everything from scratch. So, but I kind of like it because this time I'm not like in the hottest, tech startup. I'm actually doing everything on my own. So that's basically my current role right now. I'm putting the house in order so that we can fundraise eventually.
Yep. And you talk about special real estate. What do you mean, special types of?
So usually when you talk about real estate in the US, you think LA, New York, San Francisco. And what I've learned in the real estate business is that the dynamics when you look for a home that you're going to live are very different than when you look for investment properties, right? So it's all about your cap rate on the investment properties. So the more expensive the property is, the shorter your return, okay? So there are other markets in Ohio, in Michigan, in Pennsylvania that have much better cap rates with really good tenants, because there are universities, hospitals, businesses, and you can get a much better return with a very low risk. And I already use the product. So a significant portion of my mother's savings are with Spider. They are in properties that are generating income. I see how the product works. I'll see how the money compounds. So like, I'm also a user of the product. So when you compound all this, I'm like, okay, this could be an interesting thing to do. And it's a different thing that I was doing before, where I was like in a company that was already public or pre-IPO. This is like the other end.
Yeah. And you know, you're very active, you know, on Twitter as well when we talk about investing in general. And has your current role changed that perspective a little bit,
Yeah,
or?
it has. It has. I think I've had the privilege of engaging with some of the most intelligent investors in the world, and what I've learned around understanding moats, having a long-term investment horizon, using earnings calls, less about the numbers and more about, are they walking the walk? Are they executing on what they say they would? Understanding what to read around earnings reports is definitely changed not only my conviction around investing, but also on how I look at companies. So I look less about, what's the bottom line today, but rather, a much more, integral way of looking at companies. And that's because I learned from the Bailey Giffords, the T. Rowe Prices, that because of their questions, they're not looking at, what's going to be the gross profit margin of next quarter. They're looking at, how are you going to increase your moat? How are you going to fend off Amazon? How are you going to keep on growing? So having this long-term mindset has enabled me to, in a way, manage my own money like the pros do, because I know they do it this way because that's how they tell me they do it. So I learned so much around investing just talking to all these smart guys.
Yeah. And do you feel that in Argentina there's still a lot of work to do when it comes to investing?
Oh yeah. I mean, here in Argentina, you have two problems. You have the fact that the depth of financial markets is very shallow. So if you're so for you to have an example, Meli trading volume is multiples of the whole Argentinian stock market. Only Meli, right? So it's a very shallow stock market. That's problem number one, which is a consequence of the political and economic situation. And then there's another component, which is I feel that still Argentines are less literate, right, in general, around saving, financial education, postponing gratification. So something else that I learned is, the more you postpone gratification, in the end, it compounds to something that's much better. So instead of grabbing, those $400 that you could spend, on the weekend, grab it and buy shares, save money. And that will have a compounding effect that will do you much better than, buying any pair of shoes.
Yeah, I think this is a great way to round this conversation off. I could go on talking for hours with you.
You can call me anytime. I mean, we can do another session. We can deep dive into Meli. Like for me, this is fun. So I mean,
this was really fun for me as well. So thank you very, very much. And yeah, maybe we should do that every now and then. Have a great time.
Let me know, and we'll do another one. Hope the audience find this useful, and have a great rest of the week.
I'm sure they will. I'm sure they will. And thank you very much for being so generous with your time and your great insights.
You're very welcome. Take care. Bye-bye.
Bye.